2 weeks ago, we started going live, getting all of our subscribers ready for a bear market rally that would specifically target the artificial intelligence sector. In today's video, we're going to go over data points using zero trust me bro logic, all of this coming directly from central bank documents, using this new system that's spreading like wildfire across social media, hybrid technical analysis. We're going to use your basic technicals, trend lines, triangles, combined with macroeconomic data, and we're going to unlock incredible upside. It was 2 weeks ago inside our VIP trading group, we started talking about purchasing Tau with a 5x leverage position right around that $200 level. As Tau was surpassing its repeating trend line. And we'll get into that. And of course, Kaspa, which has been starting to see some upside momentarily. Since then, people who took that 5x leverage trade on Tau, they are in the bank right now, seeing massive profits, just like our river trade, just like our banker bot trade. We got all of this information from inside central bank documents, starting at 3 p.m. For those of you guys who have been watching the live stream, you've been hearing 3 p.m. on Sunday. The DXY reopens. This can be high impact for crypto. The DXY starts dropping instantly. And for those of you who are checking your charts, you noticed this upside began right at 3 p.m. Sunday, DXY opens right here. Bitcoin suddenly jumps from 71 all the way up to 74 in a matter of hours. What's happening tomorrow is not just a regular FOMC meeting. We've got every single FOMC meeting outlined right here on Kaspa and on Coinbase. Coinbase is a stock. It's not even traded on the blockchain. Yet look at how high impact this is for the entire world of investing. Each one of these green emojis symbolizes where Kaspa had a bullish reaction to an FOMC meeting. This is what's happening in 24 hours. Yet it's paired with multiple different catalysts that we're going to break down, because inside of those catalysts, inside of these FOMC meetings, we can see on Coinbase, it's the same emojis. These green emojis that cause Kaspa to rally also were fueling Coinbase to the upside, just showing this correlation between FOMC data and cryptocurrency price action in real time. This is the hybrid method 101. But it's not just an FOMC meeting. So for those of you who've been watching the live streams, we started right around February 15th. Saying get ready, because on February 18th, there's going to be a dual catalyst. They'll be releasing the FOMC minutes, which is a summary of what went on behind the closed doors at the meetings. It's the second largest high impact catalyst. You've got your meeting and then you've got your minutes, because Powell doesn't go over every single detail. It depends on how engaging the reporters are. Often they're more worried about real estate and stock market. They don't get into the questions that we want to know as crypto investors, but the FOMC minutes does. It includes policy changes, reserve balance, quantitative easing, quantitative tightening, and I'm going to actually pull up federal documents and show you how potent this is. You thought those emojis were powerful? It's these keywords that are epic. So we've got rate cuts and rate hikes. Everybody understands that. What's actually taking place tomorrow is a special FOMC meeting. We're looking at the total 3 chart right here. I'll bring it up zoomed in and just show you what's on this data. We got more cuts and less cuts. Right here, they voted at a quarterly FOMC meeting and they said, you know what? Inflation's under control. Let's throw in some extra rate cuts. They bumped it by 3, super bullish. Within 45 days, altcoins rocketed to the upside. Here, they said less cuts. Look out. This is one of our Chad callouts of all time. We got ready to sell our portfolios here on January 28th when the less cuts were actualized. Massive downside. And then again, less cuts on September 15th. Now, here's a key detail. I don't want to get too in front of ourselves yet, but inside this FOMC minute document released on October 8th, 48 hours before the crash, it read this: reserves fell sharply on September 15th in response to the Treasury general account. This is run by Scott Bessant, and it has massive correlation to the altcoin market. We can see zooming in on this, April 9th and July 9th. That's like the exact low on the total 3 chart when we zoom out. April 9th, July 9th. So the Treasury general account, when it's refilling, causes downside. Now we see the exact same text again in the new FOMC meeting. So remember, it says reserves fell sharply. This is back, rewinding the clock, October 8th. This just was released on February 18th. Reserves are getting ready to drop sharply in April. So there is an element of a bull trap here. And it all depends on the outcome in the vote tomorrow. In the event we're getting 2 rate cuts or more, upgrading from 1, it's going to be bullish. But that's only the tip of the iceberg. Why? Remember back here on February 18th, we were getting super excited, and I want to jump into the comments in a section. I can see people talking about Clanker sideliners will be crying. We're going to get into all the details on how to take this information and then turn it into a swing trade. It's going to be easier when you're dealing with Ethereum or Bitcoin, but as we start to get into the niche 100 million market cap and lower, right? Under TAO, under render, because in those documents we were just pulling up, they just keep talking about AI. They just keep talking about Treasury general account refills. That's how we got into the River 30x trade. The River bounce, which has been a double up for everybody over the past few weeks. What was so important about that February 18th meeting is it wasn't just an FOMC minutes. It was also a durable goods report. And the durable goods, super bullish, particularly for the artificial intelligence sector. We can see on virtuals specifically, the durable goods prints is the high impact event causing the most upside. Each one of these purple emojis, a durable goods print. What durable goods represents is artificial intelligence, robotics, and manufacturing. So, looking forward, next week, we've got the FOMC meeting, the dot plot vote tomorrow. This is going to be huge. The most high impact event on Kaspa has been these meetings, and it's also the most high impact event on the Coinbase stock. It's undeniable. Here's what's going on tomorrow that's very unique. It's not just an FOMC minutes and a durable goods. It's going to be an FOMC meeting and a PPI report. That means inflation connected to tariffs. For any of you guys following the macros at all, you recognize, wow, tariff inflation causing massive downside across the crypto market. In fact, when we're looking at Bitcoin, zooming out here, the take profit signals that caused all this downside are directly correlated with PPI. The market crash that started and extended on Wednesday, January 14th, came from a surprise PPI. So since the government shutdown, the macros have been haywire. They're just releasing prints whenever they want because the government shutdown closed all these macro prints. So they drop a surprise PPI and it shows massively high inflation. This in turn makes the institutional investors, they start selling their positions. They're like, no way, Jose, I'm out. De-risking, and then they do it again on January 30th. There's another PPI print, which shows massively high inflation. You guys have probably seen Master Technical Analysis, Gareth Soloway. He's been talking about Bitcoin reaching that $84,000 level. This is very simple for a technical analysis to get. You see a massive trend line there. What we do with the hybrid trading style is we correlate these huge trend lines to their macroeconomic data. Here's why. So the PPI is coming out an hour before the stock market opens. It's going to be right before this huge FOMC meeting, right, guys? In the event that that data comes in low, showing bearish numbers, showing dovish numbers, low inflation, that's bullish, it will be massive for crypto because that PPI has been what's causing the downside. Look at what the economists are projecting. High impact. You can see it right here in the red. PPI month over month. That's headline. 0.5 is what happened last month, and they're looking at a reduction. They're looking at 0.3. This will show inflation trending downward. That within itself is a bullish headwind. Combined with the FOMC meeting and then the dot plot vote, this can be a monster pivot point for altcoins. Zooming in on the total 3 chart and using that take profit hybrid macroeconomic style, the first take profit target, which is equal to Bitcoin hitting 84,000, is 840K on the altcoins. Rewinding back to January 14th, it's all the way up to 920. Now, there are certain scenarios where it can go even above that PPI data. Let's say we get a surprise beat, okay? Let's say that PPI comes in not in line with expectations at 0.3. Let's say because of the growth in AI, which is definitely fueling GDP and economic recovery, all of a sudden that data comes in massively lower, showing inflation is cooling. This is their biggest concern. The Fed, they're like, we don't want high inflation. We want inflation to cool down. And then we can start our quantitative easing. And then we can start rate cuts. It starts there. So we get low inflation. Step 2 is summary of economic reports. This is the dot plot vote. We just went over how high impact this event has been for altcoins, causing all the swings to the upside, to the downside. All of our Chad level callouts connected with this particular one, January 28th. The entire altcoin market, all of retail, was talking about how bullish Q1 was going to be. Meanwhile, we're sitting here saying we need to sell our entire bag. Obviously, because they had made a massive pivot in the dot plot. They were planning on cutting rates right through Q1 in 2025. That would have been monstrously bullish. And they backpedaled. Why? Because of the new administration, because tariffs were coming in. And that was in writing. So we're able to correlate downside extending. Now, this is going to be a bullish pivot. Potentially. Who knows? We don't know until the data gets released. So everybody should be watching with intent this quarterly economic report, because it's going to directly impact the altcoin market. Now, we've seen a time delay, so it can happen instantly, or it can have a larger effect over a 45-day period. When they upped the rate cuts, adding 3 more, they started cutting rates in September, took about 45 days for that all to actualize, then massive upside. When they went for less cuts, there was a 45-day delay. Here, and when we pull it up in the FOMC minutes, because they did the Treasury general account refill on September 15th, reserves fell sharply on September 15th. It was the Morgan Stanley regulation that was the nail in the coffin from there on out. And we can see a double top right here in the altcoin market. There's that double top, really zoomed in. This is that macro hybrid stuff. We all understand double tops in technical analysis. Here's the catch. You're going to get a ton of these double top looking formations. There was one right here, but oh, it went even higher. So how are you going to know if that double top is actually bearish, right? By connecting the macroeconomics. That's the secret. So then we've got the spread of all the voters. And inside our VIP group right now, we've already got it broken down on how many people need to sway their vote to the upside, the downside, and how that will correlate to altcoins. Step 2 is take a look at Powell's talking points. They've been going on and on about artificial intelligence, how AI is going to be huge. Let's jump into the comments and see what everybody's got to say. Kaspa's on the move. What about that April Treasury general account refill? That's important. That's in federal documentation. Right now, honing in on Kaspa, we can see, oh yeah, Kaspa's made a juicy rip to the upside, adding that macro technical analysis target like on Bitcoin. First take profit, second take profit. We're getting Kaspa easily going up to 4 with a potential rally all the way back to 5. We're in that 5-cent range. And we'll get into the timeline. I want to do a deep dive into the technical analysis on Kaspa in a second. Clanker is warming up. Sold my River and jumped into more Clanker. River, all of this insight on why to jump into River started back here because Powell ran his mouth at the meeting. The same exact catalyst that's happening tomorrow. What did he talk about? He was like, yeah, we're going to be purchasing a ton of Treasury bills, short-term bonds. This is also known as soft quantitative easing. Going back into our preview, we're going to have all this stuff inside our trading university on top of our VIP group, so everybody can correlate it all together instead of learning it in real time, making sure no stone is left unturned. What Powell was talking about is the balance sheet and the reserves. Remember how we were just reading that FOMC document from October 8th, and they said reserves levels are low? When the government shut down, the reserve levels completely cascaded. So we're talking actual banks, regional banks. They don't have a lot of liquidity. This is known as repo markets. So the Fed, in order to inject liquidity back into the banking system, they've got to do soft quantitative easing. Now, a very similar event like that took place. Let's get rid of these emojis and add something called it's basically just the Fed balance sheet And we can draw it right on our total 3 chart, and it has this one detail on it. So this is the exact same balance sheet that we're looking at here. This is showing how the Fed does quantitative easing, quantitative tightening. We'll get into that in a second. Right here, for Kaspa, for all of altcoins, the market was extremely suppressed. This banking crisis happened. Now the Fed, they do soft quantitative easing. They start pushing liquidity out, but they used long-term bonds. This was super bullish for the store of value project Kaspa. It was the #1 performer while this store of value happened. Interestingly enough, even though Kaspa was a great performer in this market, look at what was happening to the Fed's balance sheet. They were selling their bonds out and collecting cash. That's bearish, particularly for a store of value project. As this flips back to the upside, people are saying, what's your price target for Kaspa in 2030? What's the price target for Bitcoin? It's all correlated to this store of value. In the event the Fed just reloads it back to previous all-time highs, that's the most bearish case. In the event they double their entire balance sheet, that'll be huge. Now, the stable coins and the fractional banking behind them can slow this down. What they're doing is they're just creating more room to print money through stable coins. Now, this exponentially increases the dovishness for crypto, but that's an entire video within itself. So this reserves that they're talking about, Powell's running his mouth at the last FOMC meeting, and we know in our VIB group, oh my God, we got to get in some of these stablecoin projects because they're backed by reserves. We ended up jumping into River. We were looking for super low prices. We were in at River at like 350 on some trades, always projecting that the breakout was going to actualize when the FOMC minutes was released. You see, this is a River chart. We're hedging and hodging over it at $3.40. So that's a 30x return. And I'm going to show you in this video what I think is going to be the next River. It's not a stablecoin project. I'm talking about a breakout right now in the next 30 days of monstrous proportion. And it's all supported by no trust me bro information. It's all backed by FOMC documents. Absolutely. Retail is on the sidelines more than they've ever been before. They were doing articles about how Google searches for the word crypto is diminished. Since we've been talking about this bear market rally, in the comments, we've been getting eaten alive by fudsters and doubters. Just to emphasize where retail is at, they're not ready for this. And also, looking at the economic factors, people don't have a ton of cash right now to roll into crypto. So in the event you're sitting on liquidity yourself, you're a fortunate person and you're ready to make big gains. Of course, for the strongest target trades like Tau and Render that we got from reading those FOMC documents talking about artificial intelligence, a lot of those gains are already booked. But there is a third take profit level, all depending on how bullish these catalysts happens in the next 24 hours. And then from that, we can correlate it into different trading plans. Like example, Centrifuge. We put trading plans together for this around 12 cents yesterday. You had all afternoon to sell that at a full double up from 12 cents to 25 cents. And since then, it started to tone down. What Centrifuge is it's a real world asset project. KTA, banking sector, correlated with upside, depending on how bullish the data is. So for guys in the VIP group, we just did our sliding scale based on only the dot plot vote. We've still got another one that goes over talking points for each one of these macroeconomic data like PCE inflation. We put together this sliding scale. In the event the numbers come out in this range, this will happen. In the event the numbers come out on that range, this will happen. And this is unbelievably accurate for those of us who want to get up at 5:30 in the morning. This is connecting with bullseyes for timing. Like example, that river trade projected to break out at the FOMC minutes, or more related to Clanker, we better bring this one up, BankerBot. When did BankerBot break out? Well, it started rallying at the FOMC minutes, but we were focused on stable coins because of Powell talking about Treasury bills. He didn't really talk a lot about AI at this durable goods print because Powell had mentioned AI in the document, in that FOMC minutes. There was tons of talk of AI. So we were able to put together at this durable goods print, in the event we hit this range of data, it will be bullish for BankerBot. So we've got a ton of these sliding scale type of events coming up in the near future, which is the vote, the meeting, and the PPI, all happening tomorrow. The PPI is clutch. And in the event we get a cascade of bullish prints, KTA, Avanzi, and the more niche projects, they can see a rally ASAP. In the event it comes out bearish, the bears are going to win this tug of war. Clanker. Let's get through the comments first and then jump right into Clanker, because I have an enormous position in Clanker. I saw somebody at the top of the comments saying they sold their river, which we've been releasing for everybody in the main channel. Hey guys, get ready, because there's so few people in retail that are active right now. Everybody's like, oh, this is totally bearish, I'm just going to come back for this fall. They don't have the capital, or they believe everything's going to go farther lower. We've been calling out river, and everybody's getting some form of gains because we're at right now a new local all-time high. So taking profits off river and rotating them into Clanker, he's completely out to lunch about Kaspa. Well, let's go over the scenario that Kaspa gets lower. Going down even to below 2 cents is not supported by macroeconomic data, because remember, who runs the show? You hear all these rumors and these people who haven't jumped into macroeconomics yet, and you know what they think? They think, well, retail runs the market. When people get really bullish on something, it's good. This adds to the confirmation bias on social media. But if that was true, the altcoin market would have ripped even higher than it did in Q1 of 2025. It's the institutions and the market makers that run everything. This is how we end up getting this macroeconomic trend line. A beautiful example of this is the May 15th level. We can see this as resistance on Kaspa and Tau and virtuals. Every single project got stopped out on May 15th, and we were able to, on that day, on that afternoon, get our whole group ready. Hey, sell our whole bag. The market's going down. We'll buy it at a lower point. And after Kaspa got rejected here, I sold the Kaspa from this bounce trade, and I was like, that's it. Hold off on Kaspa. We do have this huge bearish inverted cup and handle, but 2 cents, just like May 15th is resistance, 2 cents is monster support. It's the bottom of this cup type scenario. So in order for anything really bearish to happen on Kaspa, we have to get the vote first for the dot plot. That's a very key factor. So the members here, there is a scenario where they say, hey, we're going to actually vote for a rate hike, right? That would be the extreme. Instead of cuts, instead of saying neutral at one rate cut, they move to a rate hike. That would be catastrophic for crypto if they flip to a rate hike and increase quantitative tightening. Yes, and in the event, we're able to capture these in a sequence. This is something that I personally really enjoy doing and get group members involved with is the multiplier trade. Okay, everybody wants to get one of these river 30x, 100x upsides. Realistically, these come around very rarely, and buying one at the bottom comes with elevated risk. I remember people inside the VIP group were sending me messages like, my river, they bought river at 575 and they're like, my river position is down, I'm cutting half. Should I sell now? And it's like, no, wait for the macro key. This is why our university is so key. We've got the VIP group. People are learning as they're going, but there's just so much to cover with macro. It's really like going to college for economics. That's why we're going to call it the Crypto University and just get into all these details. Tomorrow's FOMC meeting, all you guys have to be watching that in detail. And a really important part is when the reporters start questioning Powell. What we like to do is a multiplier trade. So we just saw BankerBot went above 800 million market cap. We know BankerBot, that's a fork of Clanker. Clanker is kind of BankerBot's daddy. It's the original project that BankerBot spawned from. Therefore, this is a multiplier trade setup. Just like that guy who commented in the beginning, he got some gains on River on this bounce trade, and then he rotated them into Clanker. In the event this hits $100 million market cap, just like BankerBot did, and we've got a lot more details supporting this breakout, we can then take some profit right then, wait for that Treasury general account refill to create a market low like these FOMC minute documents are talking about in April. Rapid and sharp downside. We can then rotate into Kaspa or Tau at a swing low. So we're getting a 3 to 4x upside and then times the 4 to 5x upside on Kaspa or Tau, expanding the profile and reducing the risk of holding Clanker. Now, you obviously want to save a moon bag to go for that full 100x like Virtual's Clanker, a great project for that. G'day, mate. To summarize the chain of events happening over the next 24 hours, we've got a PPI print that the economists are projecting is actually going to come out bullish. See this high impact one right here? Last month was 4. They're projecting this month is 3. On the Bitcoin chart, we can see how PPI has been setting up these solid levels. Master technical analysis, Gareth Soloway, he's decided that 84,000 is his take profit for Bitcoin. In the event PPI comes in super low before the meeting even touches down, we can definitely push towards the second take profit level, a level that Tau's already hit. That's the first PPI, January 14th. This is the second. Tau's already there. This is the flagship AI project. Reading all of those recent FOMC documents, scanning for the word artificial intelligence, the Fed is super bullish on that with their CapEx growth. Part 2 in the next 24 hours. This is a quarterly FOMC report. Each one of these emojis, this is the Coinbase stock chart. Each one of these emojis is what drove Kaspa rocketing to the upside. Same thing with Coinbase, the stock, and a lot of these are quarterly reports where they vote on the dot plot. So what we want to get is 4 board members moving their dot 1 slot lower. This will increase the rate cuts from 1 to 2, and it can go to 2.5. Which will be monstrously bullish. So the more people change their vote in favor of rate cuts, the better. And then we've got all of Powell's talking points. We're going to be talking about, for one, the plumbing, the liquidity. Since the Treasury general account refill and the government shutdown, This is what the FOMC minutes on October 8th, 48 hours before the downside we're talking about. This is the exact same thing that the FOMC minutes on the 30th of December, we're talking about buying these treasury bills, restoring liquidity, rips to the upside. The most bullish thing we can hear is Powell's going to rotate from T-bills to long-term bonds. That's never going to happen. But somewhere in between that scale is more bullish to bearish. This is something I customly built using a Pine script inside of our VIP group and inside this trading university. I release not just the FOMC minutes. Let's get over to the Kaspa one. Clean this chart up. We have them for every single macro, and I've released just to the Kaspa community on my Twitter a copy of this Pine script. So that's all the FOMC minutes, right? Super bullish, like the biggest catalyst. These are the minutes, different from the meetings, and more recently has been showing a more bullish effect. Look at our April 9th, excuse me. That was very important for the minutes. Looking at the total 3 chart, that was right at the nook of the downside. So here at that meeting, the Fed was talking up, well, they're going to stop quantitative tightening, and they feel like the inflation from tariffs has already been priced in, etc. The minutes made that official. Plus, that was when the Treasury general account refill happened. And we can see in writing that happened on September 15th, and it's about to happen again in April. This is no trust me bro logic. We don't do any trust me bro. All we do is expand on federal data, trickling all the way down to breakout and river starting December 30th, breakout on banker bots starting on January 26th. It's got nothing to do with me. Anyone can do this. It's like almost robotic, although AI can't get the job done. And we have these for everything. I'll show you another really important emoji. So there's the minutes. Recently, that's been high impact. Recovering from the last downside, right? So March, oftenly incorporated with conflict overseas. This is when the Treasury general account gets their checkbook. That's 1/10 the size of the United States bond market. Getting back to the point, these minutes, look at that. And then it was right here on July 9th. And inside our trading group, we were ready for this with our sliding scale. And we captured, again, the best projects using this, just like the river and banker bot. So we have a history of correlating all this data, but we can also get the bearish stuff. Like, hey, can we get one of these emojis to take profit, Jess? Oh, yes, we can. We can get one for, okay, that's durable goods. That's more for AI. Here we go. PCE inflation. PCE is a huge inflation metric. This entire downside in the altcoin market from March all the way until they cut rates in 2024 was caused by PCE. There's a double top here. That could be CPI, PPI, some other macro event, very similar to this double top and this double top, right? Combining technical analysis to macros. So we get all of these, and that'll be in the university. You can get these inside the VIP group. You can always access me. It's $47 to join. So if you guys are interested in doing this FOMC meeting and then the minutes and the PPI data in a group, this is something we have a record of for over 2 years. It's a trading journal with all of this data and the correlated trades. Now's a great time to jump into VIP for this rally. Spectral AI was a project that we did a 24-point report on it. So part of our vetting system includes a 24-point checklist. We've gotten some huge insight on a virtuals coin just to show you how effective this is. You guys know AIXBT, right? The purple gnome. This was like Everybody's like, oh, AI XBT, it's going to be the next big thing. Grayscale was talking about doing a ETF for it. Virtuals has been just getting crushed with on-chain data because the new thing is AI agents that can do wallets. That X402 narrative, I'm sure you guys have heard of that, right? X402. Siren, this one's been running. It's an AI agent. Does it have X402 capabilities? Some of them do. Anyway, the point is, by using our 24-point checklist, we were able to discover that inside the GitHub page, this is where the team posts all their super nerdy stuff that you will not be able to understand unless you're a coder. Inside the GitHub page, we can see as clear as day, the team is, and these are 24-point checklists that we've built out. Now, a lot of these are for projects that already had their rally, like DEAI. During the 2024 rate cuts, that did a 10x. Spectral did a 5x. What happened specifically for Spectral is they were hacked. It was a strong project, but they were hacked, and the hack was so powerful that it really just ruined the project. So back here, here's the Bank of Japan carry trade creating all these downsides. We were buying Spectral at 5 during the Bank of Japan carry trade dip, and then it rocketed all the way up, wicking to 20, and we were taking profit here. What happened on Spectral is they got hacked, and it proved that their whole code was too vulnerable. But here's the key part of the 24-point checklist. This is definitely 2023 when everybody was getting familiar with crypto, right? There's a huge transition when you're pivoting from stocks to crypto, right? You don't even know how the wallets work until you end up like transferring USDT from Ethereum to the AVAX trade, right? And drop like $100 into the World Wide Web. So what we do is we check the GitHub page. That's step number 3. And what we found inside AI XBT is they're working right now on an upgrade to make sure that that's not just a chat bot, that can compete with Clanker and it's able to do on-chain transactions. So we're probably going to end up taking down all of these 24-point checklists because they're all from projects that were ready for, previous rallies. And we even have one that we originally, when we wrote the report, thought it could have been bullish. But when we did the 24-point report, we found a huge flaw in the project. And instead of being bullish on it, this report found something so important that it became bearish. And a quick version to use this is the 84 cut, copy, paste questions to add to ChatGPT or Grok. You just go, hey, teach me about this project. And there's 84 questions based on that system. We got videos explaining it, etc. Yes. And Kaspa is also a store of value project. We were just talking about that huge upside that took place during, coincidentally, another banking liquidity crisis. It was the Fed's response that impacted Kaspa. So with the government shutdown recently, the Fed's response was instead of doing long-term bonds to increase liquidity, they just did Treasury bills. And this is kind of connected to the Genius Act. And we can see this is starting to ramp up. To put it bluntly, when you're putting BlackRock and these type of institutional investors at a decision with their 10-year bonds that are paying good yield, now they have to swap those out, right? During quantitative tightening or quantitative easing, they're getting their cash, right? The Fed's buying, this is the prior cycle, all the way up until the exact peak. The Fed's buying bonds. They're giving cash to BlackRock. Their balance sheet going up. This is one of the strongest catalysts. All of rate cuts and stuff, that's just flirting with quantitative easing and quantitative tightening. Because when you're paying less on the bonds, BlackRock's more likely to sell their bonds and then rotate it into the risk-on economy, stocks, crypto, real estate to get a better return, because these big dogs have to fight inflation. The whole principle of getting rich just magnified, and they use the fiat system to do it. So right here on the total 3 chart, exactly at the peak, the exact day the market topped at the last cycle, there's an FOMC meeting. The Fed says, we're going to stop quantitative easing. We're going to start quantitative tightening. We're going to stop rate cuts, and we're going to start rate hikes. So just like a clear cut, you can't deny it signal. And this chart kind of has a little bit of lag to it, I noticed. As you can see when you overlay it on Kaspa, because the top was right there. And so using this theory, in the event you were in last cycle, you could have sold the tippity top at the exact day, like we've done on so many of our super Chad callouts, using this macro stuff. All right, we got a tech bro, we got a coder amongst us, a computer scientist, masters in IT. Kaspa is the best technology out there. Nothing can beat it. And of course, all the nerds that work for BlackRock agree. As soon as the store of value event happened, right now they're just buying short-term T-bills, 6 months to 12 month, to restore the liquidity. But before, it was Circle Bank and these regional banks in California around Silicon Valley. They had a huge liquidity crisis here because of all the massive money printing they did during lockdowns and everything. The Fed had been doing quantitative tightening and rate hikes way too much, and it put pressure on the banks inside. And this is a more nuanced repo market stuff that reserves the liquidity floating around. We can see quotes talking about that inside of recent FOMC minutes. The reserves are at a low. The reserves are going to drop in April. They did it on September 15th. This rotation out of long-term store of value into Kaspa put it on the radar for me personally, being a macro trader, not being focused on tech like you are. But this is why it's such a hybrid style. Therefore, we waited until the next FOMC meeting, which became a low, and then purchased Kaspa here. As this cup and handle pattern formed, we 10x leverage traded this FOMC meeting. And that's when suddenly in the comments, we are on the map. Everybody said, wow, we 10x leverage traded Kaspa and it worked. Dude, you got to open a VIP group and show us what's going on. And since then, we've been combining technical analysis, on-chain data, and macros, giving people, in my opinion, the best edge in crypto. This also works if you're inside of other groups, because you can cross-verify what they're saying, their trust me bro logic. Anybody who's running a YouTube channel on crypto, who's been in the market every single day for 24 hours. Everybody's got a different profession. This guy is studying at IT for mastery in science. Other people are selling real estate. Some guys are running a restaurant. People that are entrenched all day, they'll all have a skill set. They'll all have a nuanced outlook that is beneficial. Being able to vet other people's call outs using this method is a great gift. And another reason why we keep our VIP group priced reasonably for everybody. In the event you've only got $10K to invest, $47 a month is going to be huge insight, showing how we get into River on the day, how we get into BankerBot on the day it breaks out, and what we've got coming up. Of course, we've been sharing this breakout anticipation with everybody on the main channel because right now, crypto is not popular. Crypto is a keyword that's not getting a lot of hits. So we're just like, yeah, everybody watching is in the VIP group anyway. We'll just unload pretty much a lot of our VIP content on the main channel. And of course, tons of people have been joining since then. What's up? Shout out to programmers. Here we go, getting into the niche of AI agents. I will say this about AI agents. So correlating their on-chain ability is a skill set that computer tech guys will have a much greater understanding in than the general retail investing. What we can do is time that entire sector upside. So you've got your hypothesis based on your knowledge that's greater than mine in these two AI agents. Timing that trade is going to be the difficult part. When's that upside going to happen? In the event we get a really bullish dot plot vote, that means more than 4 members, let's say 6 to 8, they all vote more bullish, and it raises the average to 2.5 rate cuts or more. That's what we came up with running these numbers inside VIP. And Powell's talking points include artificial intelligence. They'll always be inside the FOMC minutes. By holding the control key and pressing G, you're able to open up a window. For whatever reason, my Chrome is glitchy, and instead of searching for TGA, you can search for artificial intelligence, which is usually right on page 1 of the FOMC minutes, and see what the Fed is thinking about artificial intelligence. So for these AI agents to super rocket, for them to really see a lot of upside, for one, we want that dot plot vote to really hit home. Step 2 is inside the meeting, the wording that he uses, we want him to talk about the artificial intelligence CapEx sector. So inside the FOMC minutes released on February 18th, which is when we were initially anticipating this altcoin breakout would start right here. What also was released then was a durable good print. Interestingly enough, it came in very neutral. So there wasn't a bullish durable goods like there was for the banker bot breakout on the 26th. That was like super good data. This data, not so much. Inside the minutes, the talking points that they were using about AI, they had some bullish points, but it was very neutral because this is just from February 18th's document. This is the type of thing that we want to hear along with rate cuts in order to get a more bullish rotation into the AI agents, which vetting those is a whole new skill set. Felix, for example, or the one Claude by the Ethereum dev, we want to hear stuff like this. Several participants expect higher productivity, so the GDP is going to increase because of artificial intelligence, and it's going to put downward pressure on inflation. We're going over the talking points tonight inside our VIP group. I'll give you guys the key one right now for AI agents. We want to hear the AI sector CapEx growth. That's the key word. AI sector CapEx growth. Powell spits that out tomorrow, or a reporter asks him a question about it. It's most bullish if he mentions it in his presentation. It's also bullish if a reporter gets him to say this after. The AI sector CapEx growth is bullish and all the good stuff about AI. It's more neutral if he starts talking about AI is taking over the entire economy. It's creating a bubble. It could be dangerous. So to go full on bullish, that's what we want to hear. And then we're going to see a rotation. This is a classic. We've all heard this one before, where we get a rotation out of the flagship projects like Tau that's already exceeded take profit level 1, which is the January 30th PPI. That's the Bitcoin target at 84K that the master of technical analysis, Gareth Soloway, is always talking about. In fact, Tau's already hit the second take profit level, and on render, we can see a clear third take profit level. In the event this breakout can get higher, we get enough bullish categories, we could get back up to the October 10th level when all this downside started. I mean, that would take a sequence of uber bullish events. And of course, oil and gold contributing to this wouldn't hurt that thesis either. But the second take profit level, very on the table, absolutely. Okay, great question. Let's zoom in and do some technical analysis on Kaspa really quickly. And this is going to be great even if you don't invest in Kaspa, because this is exactly what we used inside our VIP trading group to put together the trading plan on Render. I'm going to zoom out here, just disregard the writing. It'll be a busy chart. Let's hone it in. So starting with Render, this is the repeating trend line thesis. We were the first people to ever talk about how trend lines repeat only in crypto. This does not happen in the stock market. The thesis is because of the halving, that's what creates this repeating trend line. Gareth Soloway is using repeating trend lines, and I believe he came to that conclusion on his own. We can see this trend line just happens over and over again. When we zoom in on this with an angled Fibonacci pitch, it gets completely wild. And we're about to do that on Kaspa. So what we saw here is this repeating trend line for Tau, and we're going to use this same technique on Kaspa in a second. We're getting up to it. We're challenging it. We're going to start to break out of it. You see that? And so that's going to be more upside. Now, an extension of that is the repeating trend line Fibonacci tool. So on Kaspa, we can see the same thing. And we've been using these ever since 2023, even back here, in fact, when Kaspa was down here. And when you zoom in with a Fibonacci angle on this, I'll show you, it will line up with every wax and wane almost to a frightening level. As we can see here, really zooming in, the FOMC meetings here, breakout. These trend lines are very repetitive because of the halving schedule. It's so in line. So what we've been seeing locally on Kaspa, and of course there was this devastating Bank of Japan carry trade, the store of value getting magnified through the Bank of Japan. That's a whole nother rabbit hole, extensively extending the bond market quantitative easing that only went on for 60 days. The institutional investors know how to go to Japan, take that little bit of liquidity that the Fed gave them and make it go for miles. And of course, they did that with Kaspa. That was right when BlackRock, Marathon Digital, they're building the Kaspa mining centers, showing interest in the project. So we've got this repeating trend line here, which we've been using in videos and in VIP posts to show Kaspa's support and resistance. Let me see if I have one of these. Yeah. So ever since the surprise PPI inflation and everything that we've been talking about, we've had this exact angled Fibonacci set up. The rule of thumb that we use is when we get outside of this congestion, and this was huge at the September rate cuts because we shorted Kaspa and everybody else went long because of this, in combination with the understanding of the liquidity from the Bank of Japan carry trade. Remember, Kaspa was rallying while the entire altcoin market was consolidating because of what? That PPI inflation. Excuse me, that PCE print. The PCE had came in super hot. And then you got Gary Gensler jumping in to tag team inflation. Crypto very connected with liquidity and reserves. So this double top, macro double top, just like we saw again at the top here, macro double top. And then just recently, it'll be macro events at a double top. So PCE inflation driving everything down. This upside all caused by the Circle Bank liquidity. Institutions are able to extend that, and that's what they did in Kaspa, causing the Bank of Japan carry trade. Where we are right now is we're at the end of this consolidation of resistance lines. We surpassed the golden pocket, which is very important. And now, because we're at the end of the road here, we're free from resistance. We're ready to catch upside. And it's looking like at 5 cents, which is take profit level 2, January 14th, it'll be, oh my God, this is mind-blowing alert. You guys hit thumbs up for this because this is next level. We've done this time and time and again, and we're discovering it in real time right now. Right here, we hit the next level of resistance on the repeating trend line system. Guess what date it is when we hit 5 cents? The second take profit level, right? For Bitcoin, that's 95,000. That's when they had the surprise PPI inflation. For Kaspa, that second take profit level, January 15th, surprise PPI, hits resistance at 5 cents on April 9th. What's happening on April 9th? That's the FOMC minutes, and it's also when we're anticipating the Treasury general account refill. It's right in this document. We just had it pulled up. It says reserves will fall sharply in April. It's right in this FOMC document. We just had it pulled up. I appear to have lost the place in the document, but either way, we all saw it. It's just like what they were saying on September 15th. When the Treasury general account gets refilled, the reserves see a ton of pressure and there's downside, and they're saying that's going to happen in April. Looking at the altcoin market zoomed out, we can see the last time they refilled the Treasury general account, it was at the April 9th FOMC minutes. So that will be the downside event. Right when Kaspa hits, there we go. April 9th, the FOMC minutes. This is 2024. That's when the Treasury general account refilled. Therefore, Kaspa will hit this resistance on that date and then come back down and retest 3, forming a double bottom of some sort. The disparity between the low of 3 and 3.6, how bad will the TGA refill be? Depends on what happens tomorrow. So to answer your question in sliding scale format, which is how all of our answers come to be, in the event there's a lot of rate cuts in the vote and sliding scale fashion, we have to see the data first and then make our anticipation. If there's not a lot of rate cuts, let's say you're shopping for the low, they vote and they say, oh, we're going to keep it at 1 rate cut. Wait, definitely wait. PPI inflation comes out tomorrow morning first and it shows high inflation. That's also supporting wait, because the market will cascade to the downside without support from the macroeconomics. So we always do a sliding scale. That way we can anticipate how the institutional investors are going to react. You might as well, let's say you're sitting on cash right now, you might as well wait until tomorrow, because at 11, all right? In the VIP group, you've already got the sliding scale. I just put it together and printed it this morning. We've been working on it for a while, and it goes over everything. It's super juicy. Now, tonight, I've got to do an appointment in a minute, and then I'm going to come back, and we're going to go over the talking points Powell's going to use. And that'll connect us to what projects to get. Is it going to be River? Is it going to be the Banker bot? And when is Clanker going to finally see its monster upside? In my opinion, depending on the range of macroeconomic events that happened, we've got a durable goods print on the 26th. So that's 8 days, just 8 days after tomorrow's huge catalyst of events. Then there'll be a durable goods print, which, remember, is specifically targeting artificial intelligence. For virtuals, it's been huge. Yes, awesome stuff. So super, super excited. And everybody's got to turn on their television, because all of these Uber Chad callouts that we've made, I don't have them opened up in real time now, but from taking profit back here in December of 2024 after the rate hikes, they voted on the dot plot right there, you guys, right there. I'll show you the chart. So they voted more rate cuts. We got a double, a 50 basis point, and then a 25 on the 4th. So from the vote to the altcoin market going catastrophically high, monumentally high, it's about 45 days with some instant reaction as well. And this varied from project to project. The ones we had our 24-point checklists on, like Moonwell, was one that we were trading heavily in DAI. Those rocketed right away. Right away. As soon as they got word that the rate cuts were changing, boom, those low caps pivoted to the upside. And then the larger caps, your renders, your AVAX, your Solana, they were all in this falling wedge pattern. And that's, again, a combination of macroeconomics and technical analysis. So I don't have this trading plan open right now, but we can all see that big falling wedge that was in 2024. Here's the thing. You could go into any, oh, there it is. You could go into any top 100 project, Solana, render, and you could see, hey, there's a huge falling wedge. And they all showed the exact same pattern. That within itself is bullish, particularly when you can connect it to macroeconomics. Yeah, right there for Solana, that exact same triangle. It's the same thing for AVAX. It goes on and on and on. What we're seeing right now, particularly in the artificial intelligence sector, is a very similar setup. We're seeing a classical pattern that's repeating itself, just like the 2024 rate cuts, over and over again across every chart in the sector. What classical pattern are we talking about? We're talking about the Adam and Eve double bottom. We've all heard of a double bottom on the total 3 chart. It's been the double top that has had such an impact. Here's a double top and here's another double top. The way that we vet these patterns is from using macroeconomics, because we all know there's a zillion double tops that don't do anything. But by honing in on this, we say, all right, the institutional traders are taking profit here at the September 15th Treasury General Account refill, included in documents, and then they're doing it again at the FOMC minutes at the exact same time. And this happens all over crypto specifically. Here come the institutions with their regulators. Now they're going to come in and they're going to do a 1-2 combo. So the reserves, the liquidities are destroyed because of the government shutdown. They don't have any T-bills. They don't have any repo market. It's very similar to the Silicon Valley shutdown in 2023, except for the Fed's response was different. They're using T-bills with a short-term time frame instead of the big QE with the 10-year, 2-year bonds. And we're getting that double top. So the the regulators always come in with macroeconomics here. We have this super high PCE inflation print. And what happens? Gary Gensler goes out, and right here, they're attacking CZ and Binance, and then we get this huge consolidation. What we're seeing in AI right now is a double bottom on Tau. There's a bit of one on Bitcoin, and I'll show you the macros. Bitcoin's good to project this pattern because of the macros behind it. So right here, this massive spike down and then a rally. partially is from the PPI released on the 30th, but then the support is from a labor market print, which showed huge growth in GDP, which our research into these documents is from AI. And that's a big talking point that we want to hear Powell say. He wants to say artificial intelligence in his address to the nation before the reporters even start to pick his bones. So we get consolidation here, rapid selling, and then the quick upside reaction. That's from institutional investors, buying it back up. And then again, sellers are getting out of the market, and slowly the buyers are taking control, that nice rounded bottom pattern. And we can see that across cryptos right now, even Clanker. We're seeing this huge spike to the downside, and then this rounded bottom pattern. Just like Tau, huge spike to the downside, rounded bottom pattern. Just like Bitcoin, huge spike to the downside, rounded bottom pattern. So therefore, Clanker and the majority of the artificial intelligence sector is suggesting bullish again. Looking at Render, it's the same thing. Sharp rip to the downside, rounded bottom pattern. I guess FET's been running well. Let's take a look at FET. February 6th, right? Macros and technicals combined. Sharp crash, rounded bottom, and now it's going upside. So Clanker, low cap. Here's the Clanker trade in a nutshell. For one, first off, BankerBot. This is a fork of Clanker. Recently just ripped up to 120 market cap. It's settled down right now around 50 million. And all this AI upside has been directly correlated with macroeconomic outcome. Looking at VVV, which has been a huge runner, and I'm going to explain why VVV and BankerBot have been running first, and it has to do with MSCI regulation. So here, looks like we've got not an Adam and Eve double bottom, but it appears to be a more long-standing cup formation here. This is super bullish. And then, of course, it's Fridays. What was released on Friday the 13th? I want to say it was PCE data. Anyway, a macro print comes out on Friday the 13th, and it suddenly sends, it was CPI. So it was CPI data, and it came out bullish. Remember, what's getting released tomorrow morning before the big dot plot vote? PPI. How's that connected to CPI? PPI is producer inflation. So since tariffs have been kicking off, producer inflation anticipated to be elevated, in fact, has been elevated, because they're paying more because of tariffs. You would think that that would roll over to CPI, but in fact, it's not. And they're thinking, because the market's very competitive right now, just in the worldwide economy of the United States, the producers aren't passing that inflation on to CPI. So the CPI has been good. That's been something that's been bullish all the time. Yet tariffs have been jacking up the PPI inflation, and it's almost been weaponized recently, and it's created these massive crashes. So we've got a PPI, which is setting these take profit targets that Gareth Soloway is subliminally or directly or by circumstance also using. He's targeting Bitcoin to 84.5. He's considered the master of technical analysis. Our hybrid method is showing why. Because the institutional investors sold out here. This is why Kaspa can't go to 2 cents, because the institutional levels, traders, they have a certain zone where they're just buying. And the market makers, who also own a bunch of Kaspa, they're just not going to let it go lower because they control the bid-ask spread. And that's a whole nother rabbit hole that we've been studying inside VIP. The market makers have been absorbing so much in the altcoins from this sell-off that even though PCE, PPI, and the jobs report are showing like bearish stuff, this jobs could have went either way. In fact, we have a post about this called Why Monday Matters that shows the history of jobs reports creating a fake out over the weekends, only to rally starting on Monday and Tuesday later in the afternoon, and why that happens. So for VIP members, look for Monday Matters in the search queue and pull that up. Because this actually, with the lower jobs, like we were saying originally, bullish, but with a fake out because of its impact on the DXY. The market makers have already bought so many altcoins, even though we've been getting this bearish stuff, they're just not going to allow the bid-ask spread to go any lower. They've had enough. They will not allow it. It's just not going to happen. Make sure you guys smash the like button in the event. You will be watching the FOMC meeting tomorrow, because the more people that we can get in on this, the better. It's like a brainstorm. We've got hundreds of guys in our VIP group working around the clock. We've got giveaways in our Discord giveaways. So don't be afraid to DM me a message on the Patreon app. Back to the Clanker breakout. The reason why VVV and Banker have already broken out, yet these low cap AI agents haven't yet, or only some of them have, is the MSCI regulation. We all know what the MSCI regulation is. It was that double 1-2 combo punch that Morgan Stanley threw at us while the reserve liquidity crisis was going on that we already went into and talked about. So they, adding to that bearish headwind, they go, boom, we're now regulating crypto and it's a disaster. Here's what comes out of that Morgan Stanley regulation. And we have printouts of this in VIP for members who want to brush up on it. This is also why we targeted render specific, because it has strong MSCI regulations. The whole point of that regulation is to make sure crypto doesn't become a self-licking ice cream cone, in a sense. They want to see real business models that are already existing, that crypto and the blockchain technology is just enhancing. So a great example of that is Desync. They do Ethereum naming service. Or like those guys were mentioning, KTA, these banking products. Anything that's a normal business model that would already exist in the real world that's just enhanced by blockchain technology, these are favored looking forward. Because the MSCI vote was a deferred ruling. So they never actually officially concluded that regulation. At any time, they could say, oh yeah, guess what? Back to MSCI, and projects that are in line with that, they'll see less downside, they'll be cool. This is where we're getting the RWA sector from. So I'll give you guys a hint on what we're looking at for breakout projects and what our post tonight is going to be. What we're looking at, and we've got this summarized inside our dot plot post from this morning. All the different votes and how this is going to impact what. Let's get to the bottom of it. So in the most bullish scenario, right, we've got our whole sliding scale set up, and we understand, depending on how the votes go, a little bit depending on PPI, and then also what we're doing tonight is the talking points, which will also have an impact on this. We've got low cap AI projects that haven't broken out yet. We've got Ethereum scaling projects. Ethereum has been on a monster rally. And we've got select RWA projects to join the rotation, like River and others, because of the MSCI regulation. Okay? They're enforcing this. They're almost enforcing less meme coin trading and more real projects, if you will. Okay, that's part 2 of the Clanker trade, but this rabbit hole goes even deeper. Each one of these events on Clanker, like right here, that's a macroeconomic print. That was the labor market print on February 6th. That sets up that Adam and Eve. There's that durable goods print. Ready? So it goes from 22 all the way up to 46 for Banker, way bigger. The reason why Banker and VVV went first is because they have a pay per month model that aligns with MSCI regulation. So you can already see it with these 2 projects gaining traction first. We're institutional level investors. We're saying, okay, we've read these documents that the central bank themselves have released, and they're saying all over them, artificial intelligence this, artificial intelligence that. The labor market print was so low because of artificial intelligence. And you can refine that by looking at the wage growth and really getting into like the high level mustardy techniques. So the institutional level investors, retail's on the sideline, they're out. They're like, it's over. You can see that in the Google keyword searches for crypto. They're targeting, for one, the flagship projects like Tau, our 5x leverage trade, already printing money for members, just a light amount of leverage. I know a lot of us have our capital already deployed, a light amount of leverage on this Tau trade. These guys are set. Now, we're already at the second take profit level. In the event you're in a leverage trade, and I'm going to talk about this tomorrow morning, you may want to take profit down now and then rotate it. Rotate that profit or sit on it and wait for the April TGA event. Depends on what goes on. Back to the Clanker trade. There was an article released by Binance. I'm going to see if I can pull it up real quickly. Wallets 3, Wallets 4, and Wallet 5. They're new wallets. They just started on March 1st. What they did was they purchased $5 million in USD of Clanker. Where did they get it? You Kaspa community guys will know this. They got it directly from Coinbase. And what did they do? We've all heard this slogan before: take your crypto off the exchange. And that's exactly what $5 million, I can't bring up the article, but you can find it on your own. $5 million worth of Clanker was just purchased on March 1st through March 7th. They kind of dollar cost averaged across Wallet 3, Wallet 4, Wallet 5, and then they took it off the exchange. And they took like 73% of the Clanker that Coinbase had because there's only 1,000 tokens. And they're getting burned. So with VVV and put into like a treasury that can't get unlocked, with VVV and Banker, these broke out first because of the MSCI regulation. With Clanker, dude, whoever this guy running these wallets are, he's the man. Plus, to top it off, whoever that insider was, he knew that there's a major event. And what that event was, and this just happened 72 hours ago, Clanker, jumping over to X, they just forked. Not forked, but they branched off. Now they're on BNB. So Clanker's on base, and base is where it's at for this rally and for all of 2026. Base is where it's at. Coinbase stock, in the event we can get a lower low here, I'll be buying. Look at Coinbase stock, rally from 140 to 200. Correlated with all these FOMC meetings affect even Coinbase stock, just like they did with Kaspa. It's frightening. And of course, there's an FOMC meeting coming right now. So now Clanker is on BNB chain and Base. So it just got all the more powerful. So big news here for Clanker. Plus, back in December, right before the Coinbase listing, they had an official smart contract audit, which is, in my opinion, why Clanker will eventually outperform BankerBot hands down. Clanker, the original code that BankerBot just forked, will not just catch up to BankerBot, but it will surpass it, undoubtedly. And remember, the Clanker team, they originally worked on Coinbase. They were like the OGs of Coinbase. So Brian Armstrong, the market makers, they're ready to go. Interestingly enough, for our community, heavily rooted with Kaspa fans, we at least understand the project. We've all heard that slogan, take your crypto off the exchange. Well, guess what? The big dogs already done that. Wallet 3, Wallet 4, and Wallet 5 just absorbed 73% of Coinbase's supply. There's only 1,000 tokens. And instead of the models that VVV and BankerBot use, which is pay per month. VVV is just basically like a chat GPT. And then BankerBot, there's a monthly fee and then you get to drop your tokens. Clanker has a different approach. They're just using burn mechanism, and then the fees immediately lock up. So that 1,000 token supply is shrinking drastically. So we've got our on-chain stuff supporting Clanker. We've been reading the FOMC minutes. They're talking about AI agents. Powell might even say the word AI agents. We've gone into the narrative using our 24-point checklist where we vetted the best virtuals AI agent, AI XBT, and we showed inside of their GitHub page, which is something that normal guys, even guys who are heavily into crypto, we don't know how to read code, but we can see as clear as day, they're working on that wallet connection, that X402, right? Because all that AI XBT is a chatbot. It just can chat, it can do research, it can figure stuff out, but it can't execute a trade. Clanker, Clawbot, you guys have been seeing Clawbot on your feed. Elon Musk tweeted Clawbot with a screenshot of the Silicon Valley TV show. Great show, by the way, on Amazon Prime for free. It's awesome. AI XBT, they're making this huge pivot, and that's just signaling how Clanker is ahead of the game because their agents can already do wallet transactions. This is huge. Good that you mentioned Aerodrome, because depending on how high impact the catalysts tomorrow are, and we'll be breaking this all down in VIP. We've already got the dot plot sliding scale set up. And you guys know this is insanely accurate because we're going over every possibility. We've got super bearish, the market's doomed, Bitcoin's going to 40K, definitely. We know what will happen in order for that event to take place based on this theory. And we also know the inverse of that. What will cause a massive breakout, and then everything in between. So as tomorrow's data starts spilling across the internet, we're going to have a better idea. Now, in certain scenarios, DeFi starts to really pick up. There's that February 6th V-shape on the Adam and Eve for AI. This has been not showing a rounded bottom like Tau, Clanker, and other more bullish projects, but consolidating at this level nonetheless. Take profit level 1, January 30th, is almost a double up. And the DeFi sector aerodrome running on base projected to happen later and with a more bullish outcome across our sliding scale metrics. Depending on Powell's wording, we can also get more insight into that. So a great multiplier trade, somebody in our VIP group is using the multiplier tactics right now with his River trade. River, something that broke the record books for 2026. We have multiple trading plans because Powell ran his mouth at this meeting. So we researched every stablecoin project knowing that he had to restore reserve balances and that soft QE that he would use, the soft QE, would target Treasury bills and be bullish for that sector. Over half a dozen trading plans for River projected to break out here. We're even getting in at like $3.40, just monster upside. Now we're thinking Clanker. So somebody in the comments earlier said, yeah, I already took profit on River and I've rotated it into Clanker for the projected upside. A more by the book approach right there would have been wait till tomorrow. We don't know the keywords Powell's going to say. We don't know how the vote's going to go. We want to see the data. We want to see all the cards in front of us and then make a trade. Now, we can always hypothesize what the outcome will be, like we're doing since we started live streaming, right? We started live streaming around here and we're going, guys, get ready, get ready. There's going to be a huge breakout and it's going to be in AI, right? Putting together these trading plans like, hey, 5x leverage trade Tau way down here. Get ready because it's ready to rock and roll. Get into a leverage trade on Render. Get ready for AI breakouts. Even Kaspa catching upside. Because we were anticipating the rally would come. Now, when we wait to see the cards, when we actually see the Wednesday coming with the FOMC minutes that was released right here, there was a durable goods, very connected with AI. That's why we had assumed there would be a huge breakout then, because we're like, oh, dude, durable goods, that's like the hugest print, caused virtuals to rocket to the roof. That's going to come out with the FOMC minutes. Powell's going to talk about AI, and it's just going to go berserk. Makes a lot of sense. Data came out. The durable goods was very neutral, very neutral. So getting into the nuance, a lot of people see this method that I'm showing you guys here, and they start to assume they've got it all figured out. Trust me. The only time I'll ever say, trust me, bro, this rabbit hole goes deep. Okay, we always like to verify all of our theories as deeply with macroeconomics as we can. An example with the durable goods print, there's two key metrics that we are looking at. So one of them is durable goods without transportation. The other one is durable goods without defense. And we want both of them to run in the same direction, either crisis mode or growth. Here's what happened. One went into growth mode, which is bullish. The other went into crisis mode. Back at the banker bot durable goods breakout, it was growth across the board. So with the conflict overseas, this metric is going to pivot to more growth, ultimately aligning both of these numbers, which just printed neutral at the February 18 minutes when we're anticipating the last breakout. Now, by the time the March 26 durable goods come out, in the event they're factoring in the conflict overseas or the United States preparing for it, because remember, first they took out their crypto, then they took out their banking, then they took out their AI, then they dropped the bombs. Iran's first retaliation, you would think they're going for weapons, they're going for ships. They went for the data centers. Amazon data centers where the United States is running their AI in Europe. Think about that for a second. Just think about it. And then recognize that all this data we're talking about, pulling up from these FOMC meetings, it's all talking about AI, particularly that jobs report, which showed lower jobs drastically. Meanwhile, wages were still high. Thanks for the shout out, brother. Here we go. We got somebody that jumped into the Tau long. And I can tell you guys how important this university is going to be for people that are inside the VIP. I'm going to give everybody a sneak peek access to that because I understand how crypto isn't very popular right now. But in this university, it's going to be so important to really break down how all of this stuff is fitting together, how these federal documents support all of our trading plans, how to use it on your own, which everybody watching this video is going to do starting tomorrow morning with the PPI inflation. How does that come out? Is it low inflation? Is it high inflation? And then Powell's meeting. And then all of that will be summarized into an FOMC minutes. But remember, the Treasury general account refill is coming. So there's also a huge bull trap coming. Huge bull trap, you guys. We're going to load up, and then everybody who's on the sidelines going, no way, no way. They're going to start seeing everything's doing what Tau's doing. It's going to be insane. I get tons of messages from guys like inside the river trade, like when we're back here. Our first buying was at 5 1/4. It goes up to 8. And then we realized there's a Treasury bill auction. Look out, there's going to be downside. Somebody held through that event and they're like, should I just get out of River at $3? I don't know. What do you think the macros tell you? And again, at the May 15th, huge event, which is going to play a massive part in tariff-based inflation on virtuals. I remember specifically, so we took profit, we sold our entire bags at May 15th. And something that we were into heavily was virtuals, because Powell came out and he did a surprise meeting on inflation. This caused the entire market to crash, from Kaspa to virtuals and so on. We can see right here, that's May 15th. So it was a total market destroyer, even on Tau. Zooming out. May 15th was a market destroyer. Look at that. May 15th, right there. Tries to pass it, just reject it around the house. Maybe in the right scenario of events, because for Tau, the October 8th, October 10th level is here. I mean, Tau can really push. Maybe get to 300, but it's also for you leverage traders, not a bad time to take those profits down and you either sit in cash and you wait for the Treasury general account refill, not chasing the rest of this upside. You can maybe buy back into Tau at a low, maybe short Tau when you see this Treasury general account unroll. Tau's probably not the best short, but there'll be other ones that would be. Or jump into a late breakout AI, like what I would do, I'd close that Tau leverage, take profit, and just buy spot Clanker. How's that? And then look for a rip to the upside there. So now you're getting your double up, triple up on Tau, however much that leverage trade made, and then you're rolling it into a spot position. Really catching some upside, multiplying. But make sure when you do that, don't lean in and chase it too much. You already got the upside. You're good. This is where the majority of people's mistakes are going to make. They're getting greedy. And now they're overconfident because they just got paid from a trade. So they're going to want to wait. We know the Treasury general account's happening because it's in the Fed documents, right? I lost place on this one, but we've got that pulled up inside VIP. How April it's going down. And we can see what went down last year. April 9th, the FOMC minutes. That's also when the Treasury general account gets refilled. I'll bring up the Treasury general chart. Look at this. April 9th, right? Boom. That's what it says. I know it doesn't zoom in very well. And then again, July 16th, April 9th, July 12th. See these lows? This is when Scott Bessant gets his. The size of the Treasury general account, the size of this is 1/10 the size of the Fed's long-term bond market holding. You guys have seen that movie, The Big Short? They've got a ton of these quantitative easing portfolios. They've also got the mortgage-backed securities. And the Fed's doing different stuff with each one of their portfolio, whether it's T-bills, long-term bonds, or this is the one The Big Short was built around after. This stuff, guys, when you're with your family, when you're with your uncle, or even better, your girlfriend's father, and he's a big trader, and you're like, yeah, I'm into crypto. They're going to poke fun at you, be like, yeah, how's your meme coin portfolio going? Jumping into our VIP group, jumping into this crypto university, this will allow you to raise the bar in the conversation. There'll be nobody that went to college for economics or Harvard business that will be able to outclass you. Here we go. We've got an action trader. Looking into what's going on the Clanker website. So for starters, we've just launched on BNB. And of course, this all happened 2 weeks after somebody built out Wallet 3, Wallet 4, and Wallet 5, removing 73% of Coinbase's supply. Just like we hear in the Kaspa community, get your Kaspa off the exchanges. Some big dogs already helping us out with Clanker. We want to see, so we got BankerBot, we've got Debt Relief Blot, we've got Claude. We want to see the market cap of these really start to rally hard. And as profits are taken out of Tau, we noticed with virtuals, looking into the history of this type of AI agent sector, virtuals was late breaking with a lot of profit taking coming and then rotating into it. It was the second rate cut for virtuals that was a lot bigger on October 4th. So looking at the market cap of how the biggest agents are helps us gauge how big the market cap of Clanker will be in the event it stays on course, showing how the other round of AI agents like AIXBT, they can't do wallet transactions. Right now, the AIXBT team, using our 24-point checklist, we found out, hey, look out. They're trying to upgrade these agents in their GitHub page. Super nerdy stuff. As long as Clanker can stay above the market and on the path that they're on, they're going to rock and roll. The only reason why VVV and BankerBot ran first is because of the MSCI regulation supporting their monthly fee model. So Clanker to 100 million matches BankerBot. In my opinion, that's a rally that's going to begin to unfold. And like we were talking about, that durable goods on March 26th, that's going to play a huge part in it. Guys, I've got to get going. I've got an important meeting. Thanks for checking out this video. Get ready for tomorrow. The catalysts start as early as 5:30 a.m. for VIP members. Make sure you check out the post that we just made going over the sliding scale for how the votes are, right? That's going to be step one. Depending on how bullish that sliding scale hits different sectors, if it gets really bullish, there'll be a second wave into DeFi. So we can catch late breakouts into Aerodrome and simple top 100 trades, taking profit from town, then rotating it into Aerodrome. Without even using leverage, we can get 2, 3x, maybe even 4x just by multiplying gains within the top 100s. It all depends on what takes place tomorrow. And remember, for you bears out there and you bulls, This is a bull trap scenario because of the April Treasury general account. We've got more posts coming out tonight. Make sure you check those out before the PPI data drops in the morning. No, thank you guys. The more you guys thumbs up, share this content, leave a comment below, the more live streams, videos we can do. If you're already a member inside VIP, make sure that you share any research you find, whether it's macroeconomics, on-chain data, specific projects that you find interesting. There's also a contest going on inside the Discord. Thanks for checking this one out, guys. We'll catch you on the next one.
Public's out there throwing darts to the board, sport. I don't throw darts at a board. I bet on sure things.